Welcome to Lickin' on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lickin, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lickin' on Lending. Now your host, David Lickin.
Listeners, it's good to have you back with another Lickin' on Lending podcast. Today, we're interviewing Amy Smith, who is the Chief Lending Officer at Alcova Mortgage. And what I'm trying to do with these interviews, listeners, is I want you to meet other companies and how do they run? What is unique about them? We've already had 3AM, the three owners of Alcova Mortgage, three owners, Alcova Mortgage initials, therefore 3AM. We've had them as guests already, and we've talked numerous times, and we had them talking about themselves and how they are. But I thought it'd be good if we had Amy come on to talk about her experience as someone who's been there for 10 years, or just coming up on her 10th year anniversary, to get her perspective and how this company runs. This is a special company. You say every company's special. That's true. But this one is special from my perspective because they don't lose people. People don't move on. And I think one of the big anxieties that everyone has today is we're losing production people. I'm always in fear I'm going to lose my production. People have a tendency not to leave this company. So we're going to get in those insights from Amy today. And Amy, I just want to say thank you so much for joining me. It's so good to have you here.
Thank you so much, David. I'm happy to be here.
Well, that is good. I'm very excited to hear about your background a little bit. How did you originally come across Alcova Mortgage?
Yes, so several years ago, I've been with them for 10 years, but prior to that, they were actually a customer of mine that sold loans to me. So I was an account executive, and I was out prospecting and trying to build up new accounts. And I sent an email to one of the owners about a hot new product that we had. And I think he called my phone within 2 minutes of sending the email, which is typical of him. He likes new shiny toys.
Oh, that's Bobby. That would have to be Bobby.
That's exactly who it was. So he called me very quickly. This seems too good to be true. This can't be real. And we had a great conversation. And I later drove to Roanoke and met with all three owners and just really saw how unique they actually were.
Well, describe that first meeting, because that's what I'm trying to do, listeners, is have you get insights into how other companies run. We have a lot of business owners that listen to this podcast, Amy, and branch managers and people that want to own a mortgage company. And there is something special about every company, you could say, because we're all unique and different. But there is something special about this company. What was it that impressed you in that first in-person meeting with who we refer to as the 3AM, the three owners of Alcova Mortgage?
They were small at the time. They had just moved over into the correspondent world, coming off of broker. So it was an exception for me to make because they didn't have the length, required that we needed. And so I had to do an in-person meeting with them. And it was a small office, but the knowledge, the passion, they had all their support staff in the office, and I got to meet everyone. They were, to me, I call them young. They were young guys at the time and just aggressive. And I could tell they were passionate about the business. And instantly, I'm like, I've got to give these guys a shot. And we had a great relationship.
So that's how it started. Then what made you want to move over? Obviously, the relationship developed and bloomed from that standpoint. At some point in time, they came along and said, Amy, we're tired of having you as our rep. We want you to be on our team. What was that like?
I can tell you that when I did start doing business with them and I got to know them more, I had some of my other customers who were still on broker models, which was hard, right? At the end of the mortgage crash in 2007 and 8, we became heavily regulated. And several of my broker owners just wanted to become a net branch of somebody because they didn't want the compliance responsibility. And I did send several of my top producing brokers over to Alcova. I had other companies I could have sent them to, but I knew with these particular groups of people, I knew their families, I knew their wives, their children. I really cared about them, and I knew they would align in the way they did business and the way they thought and just the whole character. And so I did send them to Alcova. And Bobby used to call me every year in December, every year for about 5 years, and say, "What can I do to get you to come work for me?" And my answer always was, "What do you want me to do?" And he's like, "I don't know. I just want you to come work for me." So he called at a right time, and I actually had a better offer from somebody else. And the more I thought about it, said to myself, I send everybody I care about to Alcova. Like when somebody calls me and says, "Where should I go as a producer or a branch?" I sent them to Alcova. So I said, it's time for me to go there myself and be part of it.
And so glad you did, because they have a deep respect for you. And obviously it's work, because you've been there for 10 years, coming up on your 10th anniversary in May. That's amazing when you start looking at it. One of the things that I want to get into is looking at what sets Alcova apart from your perspective. And there's many aspects. First of all, one of the things that when I went through and I said, "Now give me the date of hire from all these people," and it goes back to the beginning of the company. People don't leave. And what is it? So let's talk about what sets them apart. That's one of the things that stands out to me.
For me, it really is truly the ownership, the three guys.
It's always the head. It's always the top guy.
It really is. It comes from the top down. So you have three guys who grew up together in a small rural town. Two of them are engineers. That's what their degrees were in college. The other, a business major and a great salesman. And I just think it is such a unique combination to have in the mortgage business. The way they think, the way they approach things, it's different. But it really is their core values that we have filtered down as a company, and we talk about them regularly: tenacity, sincerity, agility, and all of the values that we find important. And really, you can't have all those things if you don't care. And so I think the owners truly care, and they only hire people in management that care. And it kind of filters all the way down to our loan originators. You really have to care about your community, care about your customers, and just care to make sure you get the job done. Yeah. So I do think it starts with them, and likes do attract likes. Yep. Like-minded people do. And they have been very fortunate that when they recognize talent at the ownership level, they go after it, and then that same talent goes after talent that they've worked at.
Yeah, it's a self-perpetuating thing. And it's when you say they care, it's what they care about. They care more about the relationship, is what I've seen. Talk about that from your perspective. Some owners care about, hey, if you don't make me money, you're out of here. So it's more they care about their earnings, more selfish in their way they come across, where these guys certainly care about earnings, and they do well as a company. But there's something more than that. What is that more than?
I don't know if I can put my finger on it, but I can say it in a way that one of their thematic goals is to touch 25,000 people by 2028. And so that's not saying we want to close that amount of loans by 2028. It's more about people that we touch in the community and how we help people. And that's not always just about achieving home ownership. It's other things like volunteering through charities and supporting your community when in need, when there's disasters. And if you do the right thing and approach things the right way, the business will come. That's just a benefit of it, I think. So it's not about throwing out numbers and closed loans all the time. It's a bigger...
Well, obviously they care about it because they're in business to make money and close loans, so they care about it, but it's how they go about it. There's something of a unique culture there. You run on the sales side, but you also run the operations and marketing and other aspects of it. How have they steered around the classic ops versus sales conflict that exists? Or I guess you're a part of that now. How have you and the team, 3 a.m.?
Well, I can tell you from when my background is heavy ops, and I've had sales too. So I've got both, which is a unique person. And for a long time, I lived on the sales side at Alcova, but I thrived and was successful because of the ops staff and the way they did care about their sales partners. And we all are one team, and there is not a division. And so I think we're a very sales forward company, and it wouldn't have a business if you didn't have your sales and your originators out there. And so it's important to have people in operations and support that care about the customer. And the customer is the loan officer, and it is the borrower. So it's all coming down to, you really have to care at the end of the day about getting a loan closed and making somebody's, big
I'm
financial.
thinking about some of the personalities involved at Alcova. There is a good diversity of personalities there.
Oh, yeah.
It's got the normal potpourri of mixture of personalities that in many companies can create conflict, but somehow they navigate those, and it's the culture. How would you describe that when someone is going through and working that? I'm looking again, sharing this from a perspective, what tips others can pick up and take into their company from this conversation.
I think you have to have different personalities to make things work. We do different assessments with our leadership team on working genius and other things to see where people thrive and where they might have conflict with one another and how to work together on that. So it is good when you're working on projects to put people with different perspectives, and you got to go into it knowing that I sometimes struggle with this type of personality and their direct approach versus this person needs a softer one. So we have been for years working in leadership on doing different types of assessments and truly understanding how each person thrives and works, and recognizing that and going into projects with that. So it's almost like we enjoy a little bit of conflict here sometimes.
I think if you celebrate it and embrace it, because it's going to be there whether you want it or not, you better figure out how to embrace it and work with it. Talk about some of the assessments. I know I was the one that introduced to them the 6 working geniuses. I'll never forget the story. They came to me and go, Dave, we're kind of frustrated with our operational team because we feel like we're the only ones always coming up with new ideas, and I wish they would come up with more ideas. And it struck the chord is I have this unique thing that I think God created us all uniquely different. And are we asking someone to do something that is not equipped to do that? And I think there's not a better tool than the 6 working geniuses to find those things that give you life and find those things that suck the life out of you. And it's all different for all of us. Yeah. And so I introduced that to them, and that has been a big game changer for them. When they recognize, wait a minute, we have a tendency to be more of the creative business building aspect, and they unconsciously or subconsciously purposely or less the purpose or just accidentally, they hired people on the other end to be a counterbalance to them. Yeah. So there's this good counterbalance between them on the creative side, but they didn't appreciate the fact that they were created. That's what gives them life. But that's what asking the ops staff, some of the ops staff to do that sucked the life out of them. Yeah. When they saw that, all of a sudden they relaxed and goes, oh, you go be you and we'll be me, we'll be us. And we're going to figure out a way. And I think there's valuing these differences, and that really gets into the culture. So that's one of the assessments I introduced I can speak to. What are some of the other assessments that you find that you use that are very valuable, especially when it comes to hiring production people?
The Working Genius was one of the best assessments, and there was another one we did, and I cannot remember the name, and you might have to remind me of it because I think it came from you too. It was. Yeah.
There's the Berkman assessment is one of the personality assessments that I really love. That I think we as humans are Rubik's Cubes. I think I refer to as we're 6-sided individuals. There's our love languages or our appreciation language. There's our what motivates us language. There's our 4 working personalities, which came out of Hippocrates, which is the DISC, the Berkman, the Myers-Briggs, all of them. They all have that. And I think when we begin to at least show interest in those and draw those into our process of hiring, the more insights we can get, it makes for a more successful hire. And people don't leave as a result of that, especially when you learn to value the things that you don't have in that. In others.
And it's about respecting each other too. And with
it's that respect. That's exactly right.
It was an aha moment to say, okay, wonder and invention does frustrate me. Like somebody that wants to sit around and wonder about something where I want to take more action and galvanize something. But when you have respect for the other person that thinks differently than you do, you learn to step back and let them do their thing, and then you step in when it's important and you roll.
You do your role. You do the thing that gives you life and victory. Yeah.
Yes. So I do think, and I've been in this business a long time and been at bigger companies, Bank of America, where they put us through different assessment types and management workshops. And that probably was one of the best that I have ever, really the most useful, the Working Genius to me. Yeah. We recently did an unreasonable hospitality.
I love that book.
Yes.
Yeah.
That was so amazing because it was just a different perspective with the restaurant industry and all the little.
But there's so many parallels. It all comes down to creating a customer experience And it's about the food, but in that case, it's not about the food. You got to have good quality, good product, services, loans, or food, but it's creating an experience that made
Yeah.
that restaurant so unusual.
Correct, and it was very much in touch with what we're trying to do, because the bar experience is so important to us at Alcova. It really is the customer experience, and so it was just such an aha moment to listen to an industry that is nothing to do with mortgages at all, not similar at all, but is still a service industry. And that one was a great one for our leaders, because we brought in some of our frontline leaders to that seminar, who then they were able to filter it down to the production people, which it does. Little things can make such a difference. You can institute something small and it makes such a difference. So.
What's also, which highlights something about 3 a.m., it's fun talking behind their back. Yeah, because I could have so much fun with them. And 3 a.m. is so uniquely different. Bobby with his sales personality and 2 engineers. And you got Rob, who's really quiet. I always say Rob's participation in a meeting is a thumbs up or a thumbs down. That's all you get for feedback for the longest time with Rob. And then you find out there's so much in Rob that's going on, very analytical. And then Bill Seipel, gosh, that guy is just brilliant. He processes things out loud so well. And he and Bobby are usually on opposite ends. We were teasing them about there's something we were discussing last week, and we were saying, you know what? I'm going to take Bobby's position just to annoy Billy, because he's just always so impassioned about what it is. But it really comes to goals. One of the things I want to talk about, setting goals. How does Alcova set goals that you find that might be unique and different from how others have gone about that?
We definitely, towards the end of the year and the beginning of the year, get together and set what our word for the year is going to be, our thematic goal. It's more about a philosophy before we set our number goals, because that is just such an important thing. And it can be a little, because usually a goal, you want to look at a number and see results, which we have those goals too, and everybody sets those kind of the same way. But our thematic goal and our word for the year really helps, I think, continue to drive our culture home to our employees and everybody we work with and what we're really about. So
it's such an important thing to be able to, and you're talking Patrick Lencioni work from The Advantage when you talk about thematic goals and all that. You guys are fans of that. One of the things I really enjoy about them is, especially Bobby, his internally just insatiable appetite to learn. He devours more business books than anyone I know, but Billy does too. And Rob, I don't hear as much from about it, but he's read every one of the books that they all recommend. But they have an insatiable appetite to hear and learn about new concepts. How does that filter down through the organization? Does that get annoying when it feels like, okay, so this is the book of the month that we're studying?
No, we try to make it fun when we do things like that. If we're reading a book together, and it sounds silly, it can almost be like a book club where we read it together and then we get on a call and we all discuss it, and good things always come out of it. And even if you can take one little thing, so it's important to always try to learn and have a different approach, especially in this business. Our big goal that we're working on is we want an 8-hour loan approval. We truly believe with all the tools and technology today that are at your fingertips, there is no reason that a loan cannot come in from application and within 8 hours that borrower know that they have been credit approved and that their income and asset and everything is signed off on. And we are whittling away at that, and we talk about it constantly on calls to our employees, and they're tasked with how can we get there, what can we do better. So it's constant trying to get the ideas in to get us to this big goal that we ultimately have. And
yeah, that's really good. One of the things that I get a chuckle out of them is getting them to make a decision. Those 3, they will kick something around forever. They're like bringing on a new vendor or hiring somebody. Talk a little bit about how they do that and how do they collaborate with others. Give some thought.
I'll say definitely thanks to you and TMS that you've put us in touch with some other mortgage companies that we're able to collaborate with and get ideas and talk about. We're looking at this vendor. We know you've used them and how did it go? And we can get great feedback. Plus, you've also put some great vendors in front of us too. So that helps to have trusted people in the business that can make recommendations, of course. We have somebody working for us, a young lady, our director of strategic initiatives, and she's been with Alcova for years, and she's absolutely brilliant, I have to say. And she definitely likes to go out and find new vendors and tools, and she'll vet them and look at them first. And they're very good at, if you left it up to this young lady and Bobby, they'd want it all, right? So you've got Billy and Rob slowing everybody down and saying, let's have some discernment on this and look at it first. So that's when, I'll come in, and the head of our training will come in, and, other departments, and we'll look at it and make a decision. Is this something, that we need? But luckily, because of our relationship with you, David, and TMS, we're able to get good feedback on things. So we don't tend to waste our time too much on.
It is fun. I swear to God, they have mastered the pregnant pause, because I'll ask them a question, and like you and I were having this interactive conversation. If I ask them a question, I'll never forget when they were interviewing whether or not to bring me on as their coach and advisor. I would ask them a question, and I want to go knock on the glass, Hey, are you guys there? Because it's like they're sitting there, and it's like, for the longest time, I said, pregnant pause. So I tell anybody that's interviewing with them, there will be the longest, most sometimes uncomfortable pregnant pauses, but they're being intentional and thoughtful before they speak, which I probably could learn a little bit from that, because I have a tendency, first thought that comes to me is I'm speaking it out. I think it's really good. One of the things they talk about, Amy, is they gamify automation, and they're gamifying technology changes. They're gamifying the things that they're trying to implement. That has always been a curious term to me, and I've really tried to get my head wrapped around how people gamify it. I see different people, and I've never seen it really done well, but it happens. You guys gamify things. Give us an example of that, if you could.
We're really in a big initiative right now where, for example, during our application process, we want our borrowers to connect to their assets at application, and we use Account Check for that. And then we want to be able to tap directly into their payroll providers, so they don't have to provide pay stubs and W-2s and documents to us. We want it to be easy for them. So we use, Argyle for that. And then we want to take advantage of all of Fannie and Freddie's AIM and Day One certainty validations. We use AI underwriting tool Candor for some of our underwriting as well. So we're very heavily automated. And to get change and have loan officers, because really we need them upfront selling and communicating it to the borrower where this is important, and we want you to use these tools because they're borrower permission tools. For us to make it where a loan officer would want to do it, loan officers need to see things like volume, units, numbers. They like goals, right? Like tangible goals. So we decided to gamify it and give points to all of this. Literally points. So they'll get what we call impact score points. So to them, it becomes like a game. They're like ding, ding, trying to hit all the buttons to get all the points and have all the connections and do all the things right. And when they get a certain amount of points, then they can pick a charity of their choice where we'll contribute to that local charity in their community. So it becomes a competitive, fun game that gets them to buy into the tools, and then it also kicks back into the community. So that's just one way that we have gamified trying to get our LOs and loan officers to use, some of our new tools.
You've mentioned several times, and I think this is one of the things that a lot of companies strive to do, but struggle to do, quite honestly, and that is give back to the communities. And I know this is not just something you say you're going to do, but you guys really go all out at this. Give us a couple examples of what you're doing, and what is that really, does that really convert into sales and impact, so to speak, that has an impact, the bottom line?
I think it does have an impact on your community when you're out working in your community and giving to your community. And our branch partners too, they're on P&L models, so they have the ability to contribute and do things inside of their community too. And with the recent flooding in North Carolina and how heavy that area was devastated, it was absolutely devastating. Our branch partners in those areas, the things they did stepped up, even the manual labor that they were doing and grabbing volunteers and getting out there as quickly as they can. And we were doing dollar for dollar donations too, trying to give back to the community. Every year in Roanoke, we do what we call Park It on the Market, where we give to the school systems and we fill a big school bus full of school supplies. And so some of our branch partners are now doing that too in their local community. But we always celebrate together the things that we're doing in our community to help. And when people see you out participating in the community, they want to do business with you. They do. They want to see your name and your face and know that you're a good person and that you're going to take good care of them. And that's just the culture here. It's important to us.
Yeah.
So.
I think there more and more people are realizing this is a relationship-driven business. It always has been.
Yes.
But we sometimes get caught up in the market where rates are. We've been high in rates, so a lot of people are really focusing on rates. But at the end of the day, people will do business with people that they know, like, and trust. And how do we develop that there? In your perspective, as we wrap this up, how do you see the markets changing from what you're seeing the borrowers demanding? What is the shift, if you could, that you're seeing, Amy, and how are you guys adjusting?
You know what's interesting is I really don't think it is anything new or different. When they were doing surveys years ago with consumers and borrowers about what was important to them and what was upsetting to them, they all said the same thing. I was having to give too much. Like I was giving so many documents to my loan officer, and it was painful. Borrowers don't want to turn in a W-2 or a pay stub or bank statement. They don't want to dig through their desk drawer. And when you look at younger borrowers, they don't even have those documents. They're not getting that in the mail and having it in a filing drawer. It really is the market, I think, more than ever, but it's still where it was. They want convenience. You know, they want the mortgage process to be convenient.
A little less painful, a little less complicated, a lot less annoying.
Correct. And that's where all of these great tools and technologies are coming into play, where it really is, it's at their fingertips, and they just need to give permission and we'll go get it all for you. So I think that what the borrower wants today is really what they wanted a long time ago. We just couldn't give it to them. It was impossible, during that time. And then it still doesn't change too. The mortgage business, you're nervous when you're getting a mortgage. Like, people are nervous and they want to work with somebody they know and trust and who's going to make them feel supported throughout the process. So that's where I believe technology will never take the place of the actual person, the loan officer. That's just going to help them do their job better.
It's so good to hear you say that. And that's one of the things we had talking about in this interview beforehand. But it's really good to hear you say that, Amy, because I agree with you. What worked for me 51 years ago when I started the industry works, and it's still the number one priority. Get me a quick approval and let me have count on that approval. And don't be coming back and asking me so much stuff. It has gotten easier with the Work Number and Argyle and all the tools we have to pull that, access that information. Amy, I appreciate you taking time. You are a busy person, and for you to take a little time out and us have a little fun with 3 a.m. and talk about them. I really do admire these guys and what they're doing and encouraging other people to get to know the company. If people want to reach out to you and they say, I'd love to ask her this question, how do they do this? And listeners, don't go out and try to recruit her. She's loyal as heck. Everyone and their mothers tried to get Amy. But if they want to reach out to you and get some questions and talk to you, Amy, what would be the best way for them to do?
Sure. They can email me at asmith@alcova.com. And you can give me a call, too, on my cell number. It's 757-646-6240. But I'd love to hear from you.
Yeah, good. Amy, thanks so much for being here with me today.
Okay. Thank you, David. Have a great day.
Appreciate it. Folks, I hope you enjoyed that podcast. Again, what I want to bring to you in each and every one of these interviews we do is just some perspective that might help you grow your business, run your business more effectively, or if you're looking to launch out and start a business, I want you to have these business principles. There's great companies out there, and there's many of them. There's so many different ways to climb this mortgage business mountain. But I want to say the key is having the right financial partners and the technology partners and the vendor partners. I'm so grateful for the partnerships we have. We have Byte Software, Finastra, Angel AI, True, Candid, the Mortgage Bankers Association of America, got to be a member, as well as Lenders One, the Mortgage Collaborative. These two co-ops are outstanding, as well as Mobility MMI, Modex, and Redder. Again, if you're looking for a learning management system, can't do better than Knowledge Scoop. Thank you so much for being here with us today. Share this podcast with others. We thank you for it, and thank you for your support.
You've been listening to Lickin' on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lickin' on Lending.